Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are continuing our study on the issue of shares, accounting for the issue of shares. And we are going to talk about forfeiture of shares and oversubscription. And then we are going to take a practical question to help us understand those two concepts. But then before we proceed, as usual, I would want you to subscribe to the channel, please. There are a lot of viewers who have not subscribed to the channel. They just come and watch, benefit and go. Please subscribe to the channel, like this video if you are helped with it, and then share for others to also have a benefit. Thank you so much. All right, so continuing from where we left in the part 1 of this lesson. Now, we were able to understand the double entry for the issue of shares, and we're able to take a practical question. Now, in the question that we solved, what I said was that we're assuming that all shares were applied for and there were no oversubscription. There were no forfeiture of shares. Now, in this very video, what we are going to do is that we are going to introduce those two concepts. Let me begin with the forfeiture of shares. So, forfeiture of shares. Now, what is forfeiture of shares? Forfeiture of shares means that the company has taken back the shares that they issued to the shareholder. The company has withdrawn back the shares that was allotted to a particular shareholder or a group of shareholders. That is the meaning of forfeiture, to forfeit the shares. Now, what can cause this to happen is when the shareholders fail to pay any of their calls. Okay, so we told you that they pay money on application, they pay on allotment, and when the shares are allotted to them, it is expected that as many calls as will be made as possible, they should be able to pay all the money that is due for the calls. So if they call you first call to come and pay, and you are not able to come and pay the money that is due on call, the company has the right to take back the shares. In other words, you are not able to meet your financial obligations. When they call for the second time and another shareholder also fails to pay, then the company can also forfeit the shares. Normally, they give them some grace period to settle. But if it looks obvious that they are not able to pay for the calls, then the company can forfeit the shares. That is the meaning of forfeiture. Now, when the company forfeits your shares as a shareholder, you cease to be a shareholder. What is going to happen is that those shares that are forfeited will be kept in the company and then will be reissued to another person who is ready to buy. Usually, it is not in every case that they reissue immediately, but eventually it will be reissued. Now, when forfeited shares are reissued to another person to subscribe, they do not go through the installment process just as we went through in the initial issue of shares. In those cases, normally there are situations where they pay all the share value at once, because at that time the value that will be attached to the share will be paid at once, because the company needs the money urgently. So we are not going to break them down into installments like we did again. Now, let me also introduce you to something. Now, when shares are forfeited, they are also called treasury shares. Treasury shares. So forfeited shares are also called treasury shares. So it means that whenever you see treasury shares, we are talking about forfeited shares, shares that has been withdrawn from the shareholders that the company will reissue. Now, when shares are forfeited, we say that the shares are in treasury. That is why we call it treasury shares. Take note that when treasury shares are reissued back to a different person, we are not going to use the stated capital to record that kind of share, because it is a share that is coming from treasury. Okay, so what we are going to do is that these shares, for example, if 100 shares are forfeited from a shareholder and it has not been reissued, at the end of the financial statement, we are going to make a note that 100 shares are in treasury. Anytime there is a forfeiture of shares and the question didn't say that it was reissued, after you have finished solving all your questions and preparing your account, you are going to indicate that 100 shares are in treasury. In other words, 100 shares were forfeited from shareholders who were not able to pay their calls monies. However, if these 100 shares are reissued, okay, if these 100 shares are reissued, then We are not going to reissue it in installments like I said, but it's going to come into the business together as one time payment. And so if it is reissued as, let's say, $4, okay, instead of breaking it down into paying part on application, paying part on allotment and all that, we are going to take all this $4 at a go. And so when these shares are reissued, it's going to be 100 shares by $4, which is going to give us $400. And this $400 is what we are taking at a go. We are not going to break that down into installments. That is the meaning. Now, when these 400 shares are taken, the double entry for the reissue of treasury shares, as for the bank account, we know that it will always affect the bank account. And so we are going to debit the bank account. But because there are no applications and allotments, there will be nothing like that in there. And we are not also going to credit the stated capital, because the treasury shares are to be treated differently from the normal shares that were paid through the installment process. And so we are going to create another account called share deals account. Share deals. So share deals account will be created to receive the proceeds from the reissue of forfeited shares. Now, what is going to happen is that we are going to debit our bank account with this 400. So it's going to come into the bank, and it will come in the name of share deals. 400. Okay, and then we go to the credit side of the share deals account and record bank 400. So what is going to happen is that this share deals account at the end of the period will be balanced, and the balance carried down will be added. It is part of the components of equity. Okay, so when we go to the equity component in the statement of financial position, we are going to see the stated capital, and then we are going to see the share deals account separately written, even though both of them sum up to be the capital of the company. However, we try to separate the normal flow of issue of share funds from shares that were reissued after they were forfeited, so that we will know that this is reissue of forfeited shares. So that is what we are going to do. So anytime you are solving a question and there is a forfeiture of shares, if the shares were not reissued, these are the two things. I said that if there is forfeiture, if the shares were not reissued, then you have no problem with share deals. So at the end of the account, you state that the number of shares are in treasury or has been forfeited. Okay, but if those shares were reissued, then it's going to be a double entry between bank and share deals account. It could also be that a part of those shares will be reissued and a part will not. So if, let's say, these 100 shares are forfeited and let's say 80 shares are reissued and 20 is left. So what is going to happen is that we are going to multiply the 80 by the new value that we are issuing it. Okay, and the double entry is still going to be between bank and share deals for the 80 that is reissued. But the 20 that will not be reissued will still be noted down there as 20 shares in treasury. So that is how we are going to deal with forfeiture of shares. And it's going to happen when the calls are being made. Now, take note that it means that if you are making a call, or if the question says that we make calls and maybe a shareholder with 200 shares failed to pay their calls money, what is going to happen is that in the calculation of the money received at call, we are going to reduce the total number of shares allotted by the 200 or by the 100 that is being forfeited. And so that will also affect the calls money itself, because you cannot calculate if you allotted 100,000 shares and then 1,000 shares are forfeited on the first call. That means that on the first call, you are not going to multiply the first call money by 100,000 shares anymore. No, you have to reduce the 100,000 shares by the 1,000 shares that is being forfeited. And that is going to be 99,000 shares, multiplying the shares money, the calls money. Okay, so that is what you have to do. So forfeiture of shares, just take note of what I have explained. I'm also going to explain oversubscription, and then after the explanation of oversubscription, I'm going to take a complex question which involves both oversubscription and forfeiture of shares, and then we are going to solve it together and try and increase our understanding on this. Okay, let us look at the issue of oversubscription. Now, what is the meaning of oversubscription? Oversubscription simply means that the applications that were received were more than the number of shares that is in issue. So if a company decides to issue 90,000 shares to the public, so he invites applications for 90,000 shares, and the company receives applications for, let's say, 150,000 shares, which is usually the case, because they don't know who is applying. So you can invite applications for 90,000, but you have received applications for 150,000 shares. This is the case of oversubscription. It means that they are oversubscribing for the shares. They have applied for more than what you can give. Now, this is the general principle with oversubscription. You cannot give what you don't have. All that you have to give is 90,000 shares. And that means that if they have applied for 150,000 shares, it doesn't mean you can issue and allot all 150,000. No, you can only allot 90,000 shares. Then what is going to happen? It is just like the university admission system. A lot of people will apply, but the spaces or the slots that is available for admission may be limited, okay, because of the facilities that are available. So definitely there is a decision to be made. It's either you go by first come first serve, or the best candidate and all those things. You rank your scale of preference before you choose who to give admission to. That is the same way with oversubscription. With oversubscription, it means that more people have applied for the shares than the shares that we have to give out. Now, the general principle I said is that you cannot give what you don't have. So it means that whether we like it or not, we are going to allot only 90,000 shares. So it comes with a headache. What do we do to the extra 60,000? Now, there are decisions that you can make when there is oversubscription, and these are the decisions. We have 3 different decisions to make. It's either you make them separately or you can make all at a go for. And these are the decisions. 1, you can decide to reject applications for some applicants. Now, remember that these 150,000 shares does not necessarily mean that these are 150,000 people applying. No. One person can apply for 100 shares. One person can apply for 1,000 shares. One person can apply for 10,000 shares. It doesn't matter. So the fact that it's 150,000 shares being applied for does not necessarily mean that it is coming from 150,000 people exactly. No. I hope you get what I'm trying to explain. So what it means is that 150,000 shares are applied for, but the number of people could be way lesser than the 150,000, because one person can apply for more than 1 shares. That is the meaning. But what you can do, I told you that the decision that you have at your disposal, the first one is that you can reject applications for some applicants. So out of this, you can say that, okay, as for this person, I'll reject the application. I'll reject. So you can decide that you reject application for, let's say, 50,000 or all the 60,000 extra, and then allot 90,000 based on first come first serve. That could be your decision. But whether you like it or not, you reject some, except there is a case where I'm going to talk about a pro rata basis. So the first option available is that you are going to reject applications for some if you want, but it's not a compulsory decision though. Now, the next thing you can do is that you can give preference to some people. So you can accept applications for some applicants. So you can give a special preference to some applicants, whereby you say no matter the oversubscription, this particular person there, I'll allot all the shares applied for to him or her, or this very company, our lot. So that is the meaning of giving special preference. You accept. So it's either you reject for some people and you accept for some people, or there is something we call pro rata basis. Now this is the meaning whereby you are going to make sure that you are not going to reject anybody, but then you are going to share for them on the ratio of the applications. So it could be that even though you have 90,000 shares to share for them, they have applied for 150,000 shares. If you look at 90,000 and 150,000, you will see that the ratio over here is 9/15. 90,000 over 150,000 will be 9/15. And that is going to be 3/5. Okay, so you can say that, okay, you are establishing a ratio. 3 over 5. For every share that you apply, I'm going to give you 3 out of 5. So an applicant who applied for 100,000 shares is going to get 3 over 5 of that share, and that is going to be 60,000 shares. So 60 shares, sorry. And so if you do this, then at least every applicant will get something. You are not going to get all that you applied for, but at least based on the ratio of application to the number of shares that are issued, you are going to make sure that every applicant gets something to take home. So you are not going to get all that you applied for, but you are going to get part of what you applied for. And when you apply this ratio, you will see that by the time you finish allotting, you have allotted exactly 90,000 shares, and they have been able to get at least something, 3 over 5 of all that they applied for. This is what we call the pro rata basis. So you can allot based on pro rata basis. You can allot based on pro rata basis, where you are going to make sure that you are going to, for this example, you are going to give 3 shares for every 5 applied for. Okay, so that is the ratio that has been given, and so you are going to apply that on every share. Now, the interesting aspect is that they are not going to give you the breakdowns of the shares that people applied for. So even if the question tells you that they are going to give 3 for every 5 shares, you just know that 3 for every 5 means that it's going to be 90,000 out of 150,000. So that is what is going to be done. Okay. Now, the final thing that I want to add is that you see these 3 decisions that I have mentioned: to reject some applications, to accept some people and give them all. So it means that the ones you are accepting, you are not going to apply the pro rata basis. You are going to give them all that they apply for. And then you can also do that. Now, with these 3 decisions, you can take them all at once in one instance. So what I mean is that there could be an issue of share where you are going to reject an application. In the same issue of share, you are going to give preference to some people and allot all. And in the same time, you are going to, or at the same time, you are going to allot based on a pro rata basis. So what I mean is that a question can come which will have all these 3 decisions to be made. So it is your responsibility as a student to be able to apply all these things on the shares. And so we are going to take a question, but before we take a question, let me teach you how to treat allotment based on pro rata. What is going to happen is that when these decisions are made, they have financial implications on the company. Remember that all the applicants who applied for the shares, they paid money on application. So if you are rejecting the application, then you have to refund the monies they paid on application. So we are going to do that as well. For all the applicants that they are going to make a decision to reject the applications, we also have to refund the applications monies. So we are going to reverse it. Remember that when we receive applications, it is debit bank, credit application account. And therefore, when we are refunding, it's going to be the opposite. We credit bank and we debit application. So for all those applicants we are going to reject, we are going to refund their applications monies back to them. Don't forget that. Then those that we are accepting, we don't have a problem with that. That is exactly the assumption we have already worked with. So there is no refund over there. Then when it comes to the pro rata, I explained to you that you can apply for 100 shares, but you'll be given 60. Now, the meaning is that you paid application money for 100 shares because that is all you have applied for, and they are giving you 60 shares. So ideally, you were supposed to actually pay for 60 shares on application. You have overpaid your application money. So this extra 40 shares that you have not been allotted for, the portion of that, the application money relating to the 40 shares to be refunded back to you. That is what it means. So you have overpaid your application money. You applied for 100 shares, they have allotted 60 to you. So it means that you have overpaid. You should have paid for 60 on application. That is the meaning. So the extra 40 shares that they didn't allot to you, their application money that relates to that should be paid back to you. But ideally, we don't do that. We don't refund because remember that at least you've been given something. Even though you were not given all, you've been given something. And this 60 that you've been given, they will call you on allotment to come and pay. Okay, so if the company owes you extra application money for the 40, and you also are going to pay 60 shares allotment money, then we can offset the extra application money with the allotment money that you are going to pay. So that is a set off. So it's like you owe me, I owe you. We owe the shareholder 40 shares on application, but then the shareholder also will have to pay allotment on the 60 shares. And so what we are going to do is that instead of refunding the cash back to the shareholder, we are rather going to set off the excess application money against the allotment money that the shareholder will come to pay. Even if that money is still more than the allotment money, it will go and offset the cost. So that is the meaning. And so we are not going to refund when there is a pro rata decision, but then we are rather going to set off the excess application money against allotment money, so that when it's time for them to come and pay allotment, they have already paid a part and they only come and pay the difference. That is the meaning with that. Okay, so I think it is time to take a question. I have to take a question together with you so that those of you who are still not getting the concept, the question is going to help you understand that better. Okay, so let's take the question. Mamiya Kua Limited was incorporated with 20,000 authorized ordinary shares of no par value, 10,000 of which were issued and fully paid for as at 1st January 2020. The stated capital of the company as at that date was 17,250,000 Ghana cedis. The company subsequently invited applications for 7,500 ordinary shares at 3,000 Ghana cedis per share, payable as follows. So on application, which is on 1st August 2020, you pay 2,000 Ghana cedis per share. On allotment, which is on 31st August 2020, you pay 500 Ghana cedis per share. And then on calls, which is just one call, which is October 11, 2020, you pay 500 Ghana cedis per share. Then we continue. Applications were received for 9,000 shares, and on August 8, it was decided to deal with them as follows. To reject applications of 500 shares and monies relating to these shares immediately refunded. B. To give full allotment to applicants of 1,000 shares. And then C. To allot the remainder on a pro rata basis. And then finally, D. To utilize excess applications monies in part payment of amount due on allotment. An applicant to whom 100 shares had been allotted failed to pay the cost monies, and these shares were forfeited on October 31st, 2020. Half of these shares were reissued and fully paid at 2,100 Ghana cedis per share. You are required to show the necessary ledger accounts and then show the extract of the statement of financial position. Okay, so this is the question that we are going to analyze. Now, take note of something. We are told that the company was incorporated with 20,000 authorized ordinary shares. Now, that is not what we are going to issue. Remember from what I explained to you in the previous video. This is what they have been registered with, 20,000 of no par value, meaning there were no values assigned to them at the beginning. Then 10,000 which has already been issued and fully paid. So still, take note, it is not 10,000 shares that we are issuing. That has already been issued out of the authorized 20,000. And that is what has given them the capital of 17,250,000 Ghana cedis. Because we are told that the stated capital of the company as at that date was 17,250,000. That is the equivalence of the 10,000 shares they have already issued. So still, that is not what we are issuing. Now, what we are issuing is that the company subsequently invited applications for 7,500 ordinary shares. That is what we have issued. We are issuing out 7,000. So they were authorized with 20,000 ordinary shares. They've already issued 10 and paid for. So they have 10,000 outstanding. Out of the outstanding 10,000, they are now issuing 7,005. Now, you don't care whatever. What you care for right now is how many shares they are issuing and the terms and conditions of the issue. But take note that this question has given us an opening balance for the stated capital. And that means that when we are preparing the double entries and we open up the stated capital account, we are going to take this 17,250,000 as the opening balance, the balance brought forward for the stated capital account. If you don't do that, you are going to lose marks. That is going to be the opening balance of the, so there will be a balance brought forward for the stated capital account because they have given it in this question. And then you also have to take note that this 17,250,000, because it was the opening balance for stated capital, means that there is an asset that should match it to make the accounting equation balance. So I'll talk about that when we get to the statement of financial position extract. But for now, let us focus on the fact that it is an opening balance for stated capital and it must appear in the stated capital account. Anyway, let's move on to our main business for the day, which is the shares in issue. The company subsequently, he said, invited applications for 7,500 ordinary shares at 3,000 Ghana cedis per share, payable as follows. So on application, they are paying 2,000 per share. On allotment, they are paying 500 Ghana cedis per share. And then on the first and final call, they are paying 500 cedis, making up a total of 3,000 Ghana cedis per share. Now, take note to the terms and conditions now. He says that applications were received for 9,000 shares, and on August 8th, it was decided to deal with them as follows. So we are going to deal with this application this way. Now, the first one is that we are rejecting 500 shares, applications for 500 shares, and monies relating to these shares immediately refunded. Okay, so that is the first thing you should note of. When you are going to, after taking the application money, you are going to refund an excess of 500 shares, and it's going to be calculated based on the monies paid on application, just as I explained to you. B, to give full allotment to 1,000 shares. Now remember that we have issued out only 7,500 shares, and so if application has been received for 9,000, we are issuing out 7,005. Applications has been received for 9,000, but we are rejecting 500 out of the 9,000. So it means we have 8,005 more applications after rejection of the 500. This is what we have to give. So if 9,000 is applied for and we are rejecting 5, it means we have 8,005 more. And then he says we are accepting applications for 1,000. So 1,000 is accepted. So we are rejecting 500, we are accepting 1,000 fully. So it means that we still have 7,500 applications. But remember that once you have accepted to issue 1,000, it means that you don't have total of 7,005 again. You have 6,005 more to issue. That is the explanation I want you to get. And you still have 7,500 applications. And we are also told that the next condition is to allot the remainder on a pro rata basis. So if you are allotting the remainder on a pro rata basis, you have 7,005 shares, you have already issued out 1,000, accepted 1,000. It means you have 6,005 more, but you have application of 7.5. So it's like the ratio becomes 6.5 over 7.5, or you can say 13 over 15. So this is just the ratio that we are going to use. And if you multiply by 7,005 shares or whatever, you are still going to have 6,005. That is not my focus. What I want you to understand right now is that even though we have accepted applications for 1,000 shares, okay, we still have 6,005 to issue or allot. And at the end of it all, we are going to still allot 7,005 shares. And the most important that I want you to take note of is a rejection. And it means that if you compare 6,005 to 7,005 that is left, it means that 1,000 applications will be rejected. But these 1,000 applications that has been rejected, okay, are not applications that monies will be refunded to. Because I explained to you that with the pro rata basis, the portion that is rejected will always be set off against allotment. So we are going to do the calculation for this, and then just follow me and then let me help you understand it. So let us start the solution itself, and then you see what I mean. Okay, so let us start with our workings. So workings for the monies received. So like I told you, on application, we are told we received 9,000 applications. So application for 9,000 shares. and the monies to be paid on application was 2,000 Ghana cedi each. So that is going to give us a total of 18 million Ghana cedis as monies received on application. Okay, so that is the monies received on application. Then we are told that we are to reject applications for 500 shares and refund the money. So quickly, let's look at the refund. The refund is for 500 shares. And we are going to refund their applications monies paid. And so that is also going to be multiplied by the same 2,000. And that is going to give us 1 million Ghana cedis. So it means that we are taking this money into the bank, but we are going to refund 1,000. And don't tell me you have to net it off. No. You took the applications money before the date of allotment and you decided to reject. And therefore, you have to show both in the accounts. You don't have to net it off and go and write only 17,000. We don't do that. This is accounting, and we need transparency in the accounts. Okay, so refund will be done for 500 shares. Now, that is not an issue. It is the allotment that is usually the problem for students. So let me come to the allotment. So on allotment, now the question is, how many shares are we allotting? I told you cannot give what you don't have. That is the general principle when it comes to oversubscription. You cannot give what you don't have. We only have 7,500 shares to issue. They have applied for 9,000. We have already rejected 500, so we still have 8,500 applications. Now, even though we are told to accept 1,000 shares and then the rest on pro rata, we are not going to never break the allotment down into pieces. Take note that we are going to calculate only for the 1,000 that was rejected, and then we are going to calculate for the extra 6,500 and all that. If you do that, well, fair enough, if only you can arrive and add them up. But what I want you to understand is that the moment you get to allotment, make sure that you are allotting the total number of shares in issue to be safe. You know that it's oversubscribed, and once it's oversubscribed, we cannot give what we don't have. And by all means, we are going to issue all that we have. And by all means, we are going to allot all that we are issuing, which is the 7,500. So all that you need is to just multiply the 7,500 by the allotment money. I know that 1,000 is issued in preference, 6,500 will be added later. But then we know that on allotment, it is 7,500 that we are going to take monies for. However, the extra 1,000 that we are not going to give, because if we are, the difference between 9,000 applied and 7,500 issued is 1,500, and we have rejected 500. So the 1,000 is still in excess. That after doing the pro rata, we should have still refunded their money to them. But I told you that those 1,000 shares, the monies paid on application will not be refunded, but it will be set off against allotment. And that is what we are going to do. And so on allotment, it's going to be 7,005 shares multiplied by the allotment fee, which is 500 cedis. And that is going to give us 3,750,000 Ghana cedis. That is how much they have received on allotment. Now, you can decide to go by whatever method you want to go by. If you multiply, let's say you decided that you are going to multiply the 1,000 shares that was fully allotted by the allotment money of 500, you are going to have 500,000. And then later you come and multiply the 6,500 by the same 500. What are you going to have? You are going to have 3,250,000. If you add it, you are still going to have 3,750,000 for allotment, which is the same as what I've done. So there is no need to split it, but you just have to understand the principle that once it is allotment, we are allotting everything we issued. That is the full 7,500. Forget about the terms and conditions when it comes to the calculation of the allotment money. But after that, then we'll come and be mindful of the 1,000, and then we'll calculate how much will be used to set off against the allotment money. Because this is the allotment money that is supposed to be received. But we are going to calculate how much is coming from application that is going to be used to set off against allotment before we know how much money actually to take from them on allotment. And so now that we know that 3,750,000 is what is supposed to be taken on allotment, let us look at the excess application money that will be used against allotment. To set off against allotment. Now, that is 1,000 shares. Now, remember that I told you all the applicants of this 1,000 shares did not go home empty-handed. They have taken some part. You know, that is the idea of pro rata basis. They will give you some and then they will reject a part of what you applied for. So all these who applicants for this 1,000 shares have gotten something home. That is why we are going to use their money for application on this 1,000 shares as a set-off against the allotment. And so on application, how much did they pay on this 1,000 shares? You are going to multiply that by the application money. Remember, not the allotment. So that is 2,000 Ghana cedis. This is how much they paid on that for allotment. And that is going to give us 2 million Ghana cedis. So we are going to use this 2 million. It means that this is the amount you are supposed to take on allotment. However, we are also owing shareholders this amount because we did not allot that share to them, but they paid this 2,000 on that and it's in our bank account. So what we are going to do is that when it's time for allotment and they are coming to pay, instead of them paying for the 3,750,000 Ghana cedis, they are going to pay the difference because we also owe them 2 million. And so we are going to transfer and use this money to set off against allotment so that the difference will be paid by the shareholders. And so the difference to be paid is going to be this minus that, which is going to give us 1,750,000 Ghana cedis. That is the money to be paid on allotment. This is the money due on allotment. This is how much we are using as a set-off. And so this is how much they are actually going to pay into our bank account. I don't know if you are confused, but if you are confused, please, you can, if this is a video, you can reverse it and watch it again as many times as possible. If you are so confused, you can just send us a message and let's see how we can help you out, because I know this confuses a lot. Okay, let us move to the calls. Now, as for the call, so let me just take note of something. On application, we multiply by the number of shares applied for, but on allotment, it's by the number of shares that is being allotted, okay, in total. Then we come to the calls. It is expected that the number of shares that was allotted for 7,500 shares is the same amount, is the same number of shares that they are going to pay the calls money on. But we are told in the question that an applicant who was given 1,000 shares failed to pay the calls money. So it means that on the calls money, instead of the 7,500, it's going to be 7,500 minus the 100 shares because the person has failed to pay. I hope you are getting it. It's going to be 7,500 minus 100 shares. That is going to be taken on the call. So on the call, it was 7,400 shares. That is the difference. Multiplied by the amount to be paid on call, which is 500 Ghana cedis. And that is going to give us a total calls money of 3.7 million. So this is what it means. So it means that 100 shares were not paid for on allotment. And we are told that the shares were forfeited at the end of that month. And so they have forfeited the 100 shares from the shareholder. Now that is not all. After the forfeiture, the 100 shares that are in treasury, we are told that half of those shares were reissued. Not all the shares, half were reissued at a fee. So half of 100 shares will be 50. And so reissue of forfeited shares is going to be 50 shares because we are told it's not all the 100 that was reissued. It was half. So 50 shares by an amount of 2,100. That is what we were told in the question. That is the amount that we issued it for. And that is going to give us 105,000 Ghana cedi as the amount that is going to our share deals account. Okay. All right. So we can now move on to the double entry aspect to enter the workings that we have done into the accounts. So we open our application account. let me put 3 zeros up so that at least it will cater for the many zeros that we have in the workings. And then I'll open account for allotment. So allotment account. The same way I put 3 zeros up for the allotment account. And then I'll open an account for the calls. It's just one call. So calls account. Call account. I put 3 zeros up to cater for the many zeros that we have. And then I'm going to open the bank account and then the stated capital account. So let me open an account for bank. So bank account, and then the stated capital account. I put 3 zeros up so that we will reduce the number of zeros we write in the account. And then finally, let me open an account for share deals. Remember that there was a reissue of forfeited shares. So share deals account will cater for the reissue of forfeited shares. So the same way I put 3 zeros up beside the currency sign. All right, so we are good to go to make our double entries. So this is what we are going to do now. We are just going to enter the amounts that we had from the workings into the account based on the double entries. And so just follow me. Let me take you through. Now, with application money, we had 18 million, for the beginning. That is what we actually received on application. And so we are going to credit application account and debit the bank account. And so it's going to come in here in the name of bank, 18 million. But remember that we have 3 zeros up already, so I'm making it 18,000. And then we come to the debit side of the bank account and we write application, 18,000. That is what we are going to do. Okay, so that is the first one. And then remember that there was a refund. According to the question, we were supposed to reject applications for 500 shares, and therefore we have to refund the applications monies to them. And from the workings that we did, we are supposed to refund a total of 1 million Ghana cedis to those applicants. And therefore the refund is going to be a reversal of the entry we just did. When they paid for application, we debited our bank account, we credited application account. So now that we are refunding, we have to debit application and then we credit the bank. And so we are going to debit application in the name of bank. The amount is 1 million. I'm writing 1,000 because I have 3 zeros up already. And then I'm going to credit the bank account in the name of application. That is a refund, 1 million. All right, so we are done with the second entry. So the most important thing is to understand how to do the workings. Once you're able to do the workings, the double entry is not anything difficult that you have to struggle with. Then we move to the allotment. That is where the issue is. Remember that the money that is actually due on allotment is 3,750,000 Ghana cedis. That is what is actually due on allotment. However, we were told that those applicants who received allotment on pro rata, their excess application money should be held against allotment. We are not supposed to refund that to them. We are supposed to hold that against allotment as a set-off. And so what is going to happen is that we need that 3.750 million in the allotment account. But there is a portion of that money that is already in application that we have to set off. So what we are going to do is that we are going to transfer from application to allotment to cater for that amount. And when it is not up, then the difference that I calculated with you, 1.7, will now be collected into the bank account. So this is how we are going to hold that. And then the set-off money was 2 million. And so what we are going to do is that we are going to debit application money account. We are going to debit the application account because we are transferring the amount from application to allotment as a set-off. And so we are going to debit application account in the name of allotment. This is how you transfer excess application money to cater for allotment. The amount is 2 million. So I write my 2,000 because I have 3 zeros up. Then I come to the credit side of allotment. I'll call it application. And that is also going to be the same amount, 2 million. And so that is exactly what I have done for you. So we were supposed to take 3.750, but then 2 million is already owing by us to them. So we make that as a set off. So the difference of the difference between the 3.750 and the 2 million will be 1.750. And that is what they are actually going to pay in addition to the 2 million that is already with us that we have used it as a set off. Okay, they were supposed to pay 3.750, but we are also owing them 2 million. So we use that as a set off and they pay only the difference. And the difference that they are paying, we calculated that as 1.750, which is the difference. And so that is what is coming into allotment and bank. Remember that to take allotment money, the double entry is debit bank account, credit allotment. But this time, because we have already transferred the money, we are only going to do that with the difference. And so we are going to debit the bank account in the name of allotment with only the difference, 1,750,000. And then we are going to credit allotment account in the name of bank, 1,750,000. So that now it sums up to the total. So when we are transferring the money from allotment to stated capital, you will see that we will now sum up these two and transfer, and it's going to sum up to the total of 3.750 million, which is supposed to come to stated capital. So yes, we are still going to get the same amount to transfer to stated capital, but they are coming from different sources. That is the only trick with the oversubscription. That part will be transferred from application, and then we are going to only receive the difference through the bank, and then we are going to transfer the total to stated capital at the end. So that is how it's going to be done. And then we come to the call accounts. Now, take note that if this application money was so much that it could cater for all the allotment, then there will be no need to take extra money from them through the bank. So let's assume that the extra application money, the excess application money, that was to be set off against allotment was, let's say, 4 million. Okay, so if that was the case, it would have been more than even the 3.750. So we would have transferred all that money here, okay, 4 million, and still transferred the difference to come and cater for call, because we need only 3.750 as allotment. And so if we had transferred 4 million here, we would have still transferred the difference. If you take the difference, will be, let's say, 250. So we would have transferred that to still cater for call before we take the difference from them through the bank. So take note that the excess application money could be more than the allotment, but it will continue to set off through the first call, second call, and as many calls as possible until it is exhausted. You cannot take any money from them through the bank if your excess application money that is set off against allotment has not been exhausted yet. So that is what you should understand. All right, so over here was exhausted, and then we took some from the bank. So we are going to take the money from call from them, the call money from them through the bank, and nothing is going to change. And remember that on the call, 100,000 share applicants couldn't pay, and so when we calculated, we used only 7,400 shares, and we had a total of 3.7 million. So that is what we are going to take through the bank. And so when we come to the call, we are going to credit the call in the name of bank, 3.7 million. And then we come to the debit of the bank and we say call, 3.7 million. 3 zeros already up, take note. And so this is how the call is also going to be. And then finally, let us look at the share deals account. Remember, I know we will transfer the rest to stated capital. With the share deals, I think that was a reissue of the forfeited shares. We were told that these 100 shares that were forfeited and in treasury, half of them were reissued at a value of 2,100. And so we have already calculated that to be 105,000. And so we are going to take that through the bank. So we are going to call this share deals. That is 105. And then we are going to credit the share deals account in the name of bank, 105. We took that at a go. So ladies and gentlemen, we are done with the double entries. What we have to do now is just to transfer these temporary accounts to stated capital. The only one we are not transferring is the share deals. I told you that share deals is part of the components of equity. Now, we are supposed to transfer these amounts from the temporary accounts to the stated capital. But remember, share deals is not going to be transferred. I told you that share deals is part of the components of equity. Now, before we transfer to the stated capital, remember that I told you from the question that there was an opening balance for stated capital. If you forget that, you'll be in trouble. Now, there was an opening balance for stated capital, and we're told that that was 17,250,000. That was the 1st January stated capital. Okay, so we are going to bring that first as an opening balance, a balance brought forward. 17,250,000. So 3 zeros are up. So I will leave it like that. So this is the opening balance before you even think of a transfer. So if the question did not give any opening balance for stated capital, you just go ahead and transfer. But once you have been given the opening balance for stated capital, you make sure that you bring that first before you do your transfer. When we come to the application account, we are going to close off the account, just like we do for any account. The difference, if you compare, this side is 18,000, we have a 3,000 up here. The difference is going to be 15,000. And instead of calling it balance carried down, I told you we are transferring. So we call it stated capital. And what is the meaning? It means that this is actually the money that we are transferring to stated capital. Now take note that even if you have, this is actually the money that is due on application. Because if you multiply 7,500 shares that are in issue by the 2,000 Ghana cedis that is supposed to be paid on application, you are going to get 15 million. And this 15 million should have been, but because of oversubscription, we actually got 80 million. And now we have transferred the differences to where they belong. We refunded 1,000 and then we transferred 2. So this is actually the money that is due on application. So we transfer that. We come to the credit of stated capital and we call it application. And that is going to be 15 million. All right, so that is it. And then we move to the allotment. Allotment 2, we now combine the two. So the total is going to be 3.750 for the 2. So that is the difference. And so we call it stated capital. And you would see that we have now arrived at actually what is due for the allotment. So this is how we went through the process, but this is finally what we had from the workings. And so we come to the credit side of the application account and we write allotment 3.750. And then we move to the cost. It's just a straightforward transfer. Stated capital. You just close it off and then you come here and you say call 3.7 million. So we are done. So the only thing now left is to do the balancing of the bank account and the share deals account together with the stated capital account. These two are items of equity. This is an asset. So we can use that to prepare our statement of financial position extract. And so let's balance off our bank accounts. When we add up the debit side of the bank account, we are going to have 23,555,000 Ghana cedis, but 3 zeros are already up. So we'll put the same here, 23,555. And the difference, which is the balance carried down, is going to be 22,555. So the balance brought down will be 22,555. That is what it means. And then let's do same for the stated capital. So the balance carried down, which is going to be the difference. So the difference, if you add up this credit side, we are going to have 39,700,000. So that is it. The 3 zeros are already up. So we'll put the same here, 39,700. And that is going to be the balance carried down on the stated capital account. Remember, there was a balance brought forward, so it has shot it up. And then we do the same balancing for the share deals account, which is going to be 105,000. So the balance brought forward or brought down for the stated capital, 39,700. Balance brought down for share deals, 105. So this is it. Now we are going to prepare our statement of financial position extract. haven't been able to do this. Now take note that there was an opening balance for the stated capital account. If that was not there, the bank balance will automatically be equal to the stated capital and the share deals. But this balance will be a difference. And remember that the question just told us from the beginning that there was a stated capital of that amount. They didn't tell us anything, but of course, once there is capital, it should be equal to assets. So there was also an asset figure of that amount, which is supposed to be implied by the accounting equation. And so when we get to the statement of financial position extract, we have to show that there was a total asset of that amount, which is equal to the opening balance of the stated capital at the beginning, before we can now bring our current bank figure and then we'll add that up to get a new total asset. If you don't do that, your statement of financial position is not going to balance. Okay, so take note. We are going to prepare the statement of financial position extract. Okay, so we now prepare the statement of financial position extract. So statement of financial position extract for Maame Akua Limited. So, like I told you, okay, let me put 3 zeros up like that. And I told you that there was an already assumed total asset according to the accounting equation of 17,250,000. So you start with that total asset figure which was given at the beginning. And then you can bring your bank balance. The current bank balance that you had was 22,555. So you add that up. And that is going to give you 39,805 as your total assets. Okay, this is just an extract. And then you come to equity. We have stated capital. The balance brought down on the current stated capital account that we prepared was 39,700. And then we add the share deals, which is also a component of equity, which was 105. And that is going to give us 39,805. So it has balance. So you see that if you forget to bring the total asset that is implied in the question, you'll be confused as to why your statement of financial position extract is not balancing. And if you forget to also bring your opening balance for the stated capital, it will still balance, but you would get something wrong. So please let us take note that we always have to remember that when there is an opening balance for stated capital, it means that there is an implied opening balance for total assets for the purpose of preparing the statement of financial position extract. Okay, so this brings us to the end of the part 2 of our lesson on the issue of shares. In the next video for issue of shares, we are going to deal with premiums and discounts. When there are premiums and discounts concerning the issue of shares, which in my country, Ghana, it's not likely because over here, our shares are mostly of no par value. However, for the international community, we will look at how to treat that for you. And then from the issue of shares, our next video on company accounts, we are going to deal with the final accounts of companies. We are going to look at the simple way that we prepare the company accounts, the final account, which is just like that of the sole trader with a slight change. And then we are going to look at company accounts for publications, which we call the published accounts. Then from there, we are also going to deal with interpretation of accounts, which is accounting ratios and how to interpret them for business analysis. So all those things are ahead of us. So stay tuned, don't go away. Continue to follow us, subscribe to the channel if you are yet to subscribe. Share this video and let us all be successful together. Until we meet again another time, it is bye for now.